In business today, three things to know. First, under renovation, a congressional plan to wind down Freddie Mac and Fannie Mae and overhaul the nation's $10 trillion mortgage marketplace. Then, Tesla ticked off. Another state puts up roadblocks for the electric car maker to sell directly to consumers. The fight between Tesla, the states, and the entrenched car dealers. And if you want to live large, we'll bring you the must-haves in luxury goods, from cars to vacations. Arise Exchange for Wednesday starts now. Hello, everyone. I'm Andrew Schmertz. The nutritional supplement company Herbalife now faces a federal investigation. The Federal Trade Commission late Wednesday announced that it will probe the structure of Herbalife, which hedge fund manager Bill Ackman calls a Ponzi scheme, and has urged the government to shut the company down. Herbalife itself issued a statement that it welcomes the inquiry so it could prove that the company is on strong financial footing and is in compliance with all laws. Ackman has a large short position on the stock, which fell today by better than 7% on the news. Also falling today, shares of mortgage insurers Fannie Mae and Freddie Mac. They continued their slide Wednesday after a bipartisan plan was announced that would eliminate the federally controlled mortgage buyers. Here's how Freddie Mac finished the day. Down close to 20%. That increased from its slide yesterday. And Fannie Mae also down today, about 12% to 355. The blueprint is designed to reform the $10 trillion mortgage industry and create a new government insurance fund. The proposed move is designed to shift the risk of backstopping mortgages from the government to private investors. In 2008, the U.S. bailed out Fannie and Freddie to the tune of $187 million. Dick Beauvais is the Vice President of Equity Research at Rafferty Capital Markets and is the author of Guardians of Prosperity, Why America Needs Big Banks. Dick, welcome back to Arise Exchange. Thank you for spending a few minutes with us today.
Thank you, Andrew.
So let's talk a little bit about this. Freddie Mac and Fannie Mae backstop, from what I understand, about 3/5 of all the mortgages in the country. Is this move designed to get the government out of that business? And what do you think of the plan?
Well, I think there's no question about the fact that the government wants to be out of the housing finance market because housing is the most subsidized industry in the United States. But I don't think that the government can get out of the industry on a rapid basis. In other words, if they did it over 30 years, maybe, but to attempt to do it very quickly is I think, disastrous. And I'll give you a couple of reasons why. Number one, people have to remember who owns Fannie Mae and Freddie Mac. The taxpayers do. Mm-hmm. In other words, taxpayers invested $190 billion in these companies, and they have a senior preferred A stock as a result of that. And that senior preferred A stock should be paying $19 billion a year in dividends. Number two, the taxpayer, as a result of warrants that it holds in Fannie Mae, in Freddie Mac, basically owns 8.2 billion shares in the two companies put together. And the value of those shares, if these companies were allowed to operate freely, would be $155 billion. So what this bill does is it rips off the taxpayers of $355 billion. It takes that senior preferred A and moves it down to zero. It takes those warrants and moves them down to zero, and therefore the taxpayer loses, as I say, $355 billion. Plus, the taxpayer loses $19 billion in dividends, which would be paid by these two companies for, we'll have to say, infinity.
So why do you think there is a rush to do this then, to get the government out of it? Is it purely politically motivated, do you think? Is it just looking ugly that we gave these companies so much money? And right now they've been paying them back, am I correct?
Yeah, no, the government has gotten back all the money that it provided to Fannie Mae and Freddie Mac, bailed it out, loaned it, invested it, whatever the words you want to use. They put $117 billion into Fannie Mae. They got back $121 billion, and they still own, as I say, a preferred worth $117 billion. They put $73 billion into Freddie Mac, and they got back $81 billion, and again, they own $73 billion in preferreds there. So in total, the two preferreds are worth $190 billion. But the bottom line is the U.S. government believes that it should no longer finance housing in the United States. And that is the biggest problem, because if Fannie Mae and Freddie Mac go, there will no longer be 20-year and 30-year fixed-rate mortgages in the United States. If you eliminate those mortgages, and I've spoken to at least a dozen banks, and they all tell me they will not make those mortgages if they can't sell them to Fannie and Freddie. If you eliminate those mortgages, you drive up the cost of owning houses in the United States, and you drive down the prices of houses.
Yeah, it's really the government-backed loans that have allowed the middle class to buy homes in this country.
In many cases, that's exactly correct. In other words, if you took the average median income, if you took the median income of a household in the United States, it's $51,000. If they can use a 30-year fixed-rate mortgage to buy that house, they can buy a $425,000 home. If they have to use a 10-year adjustable rate mortgage, they can only afford a $190,000 home. Right. So this bill just whacks the prices of houses in the United States so that every American will see the value of his house goes down, in addition to losing the $355 billion that the U.S. Congress wants to take away from the American taxpayer.
All right, Dick Beauvais, thank you so much.
Thank you.
U.S. equities moved moderately lower Wednesday. China's pullback on growth estimates weighed on investors. Let's take a look at the final numbers from the street. The Dow Jones Industrial Average down about 11 points to 16,340. The S&P 500 up half a dollar to 1868. The NASDAQ up 16 to 4323. Taking a look at some of the stocks we're watching today. General Motors been tumbling in the 2 weeks since it recalled 1.6 million potentially defective vehicles. The Justice Department has now launched a criminal investigation into faulty switches linked to 31 accidents and 13 deaths. GM shares down 32 cents to 34.86. By the way, there is a controversy over whether General Motors is going to be liable or the pre-bankruptcy General Motors, known as the Motors Liquidation Company, is going to be liable for this. So that will be interesting to see how that plays out. EPL Oil and Gas is set to be acquired by Energy 21 to the tune of $1.53 billion. At its new capacity, the company is expected to produce approximately 65,000 barrels of oil a day. EPL Oil and Gas value rose nearly 8.5 points, closing at $37.50. And Pfizer announcing a federal judge has invalidated a key patent for the painkiller Celebrex. That sent Pfizer shares down better than 1% to 31.98. The states are starting to line up against Tesla. The business model of the electric car maker is to sell cars directly to consumers, but many states require automakers to use independent dealers. Today, Ohio said it's considering banning direct sales. New Jersey ruled against Tesla on Tuesday, and Texas and Arizona already have bans in place. Is Tesla an innovator or just trying to cut out the middleman? Lauren Fix, the car coach, is on the phone with her analysis. Lauren, why can't I just buy a car from who I want to buy a car from?
Well, about 80 years ago, there were some rules put in place in order to protect consumers. Because when you purchase a car directly from a car manufacturer, like you would think you could just pick up the phone and call Ford or Audi or whoever and buy a car, the thing is there's a reason that there's a dealer network. There's a reason there's an independent in between the manufacturer and you. And some of those reasons are actually for your protection. Mm-hmm. When you have a problem with a car, you're going back to an independent local dealer who wants your business, who wants to help and support the community, not just with jobs, construction, building, of course, the facilities, and all the other facilities that are around there, the local coffee shop.
And Lauren, this was to prevent also sort of the idea of vertical monopolies, right? The automakers just dominating the whole business. So Tesla, why is Tesla then so against the idea of dealerships?
Well, he wants to create a whole new dealership structure saying, why can't you buy it just so you buy an iPhone?
We're talking about Elon Musk.
Right. Elon Musk is saying this, that he would like to create a new structure. This is an old structure. We've been using it since the 1900s. It's time to come to something new. Now, he does have a point, but there's a reason that we really want dealers in the middle as a consumer. One, if you got a problem and you have a maintenance problem or a service problem, it's inconvenient for the dealer to say, you know what, we really don't, we want to sell cars. We really don't want to be there maintaining or taking care of problems. The independent repair guy actually is a dealership chain. Sometimes they're individual dealerships. They have millions of dollars invested. Here's the big thing. They put tax dollars into local communities. They also put money, their profits, into certain politicians' pockets to support them. So this is quite ingrained in much more than the average person would think.
And we should tell you that a good part of the middle class in this country was created because of auto dealerships. They really rose through the ranks because of the businesses that they were able to put together. Lauren Fix, thank you so much.
Thank you.
And coming up, the internet turns 25. You know, there's people alive today who did not know anything other than the internet. How surfing the web has become a must-do activity and where the internet needs to go from here to survive. You're watching Arise Exchange. Because we live in a global, interconnected world, business news no longer stops when the markets close on Wall Street. And what we've discovered over the past few years of the financial crisis is that events and news that happen even in the smallest countries impact the United States and the world at large. As we bring together experts and analysts and thought leaders and CEOs and companies across many industries to not only provide the macroeconomic view, but news everyday people can use. Welcome back to Arise Exchange. Imagine having to go to the library to look things up, go through the card catalog. Remember that? Well, the internet today turns 25. It was back on March 12th of 1989 that the British computer scientist Sir Tim Berners-Lee announced his proposal to make information sharing possible over computers. Now, 25 years to the day, the inventor of the World Wide Web is calling for a digital bill of rights that would keep the internet free and open. To talk more about that and the impact of this medium on our lives is Ari Zaldan. He is CEO of Quantum Networks, and he is back here on Arise Exchange. 25 years for the web. The internet had been around in a different form before, correct? Defense computers have been connected for a long time.
Correct. It's been around for the 60s, but nobody had access to it until the late 90s. And obviously what's happening right now is just we're seeing a complete explosion. The most amazing thing is that we haven't even scratched the surface. This is just the beginning.
Yeah, it's a tremendous story. So when it first started, what was the ramp up like of getting people online? I mean, I remember, you know, they dialed up and like shh.
Right. It sounded like there was a fax crackle, and then, you know, maybe you got a website, maybe you got it, and then 30 seconds later you got knocked off.
That's right.
You know, where we are today, we're completely immersed. It's on our mobile, our tablet. It's getting on connected devices now and machine to machine. We're completely immersed in it. And again, we haven't even scratched the surface, which is amazing.
And I think we have a graphic, if I'm right, of some of the sort of milestones of the internet. There is billions of websites now. Is that correct?
Yeah, and they're just growing every single day.
And so where do you think the internet now has to go to the next step? Because this has exploded so quickly. 25 years is really virtually no time in history. Is this a platform that now needs to change to survive?
I don't think it's ever going to change. I think it's going to evolve, and it's going to evolve very, very quickly. I think we're now going to move into a medium where we're dealing with technologies like machine to machine. So we're going to have our television communicating with our refrigerator that's going to communicate with Amazon. We're going to see sensors on our bodies. We're going to see health technology
that is the next step probably, right? Some wearable technology that is going to interconnect with the internet. So now in all of this, privacy has the death of privacy they talk about. There was a good 60 Minutes story this weekend, I don't know if you saw it, about how everything we do online on our mobile phones is tracked and assigned to us personally in some cases. So as is typical of technology, laws take time to catch up to it. What do you think needs to be done there?
Right. I think there needs to be a standard, and I think that's what Sir Tim Louie is looking to do right now, is to create some sort of digital standard, some Magna Carta that actually enables some sort of security and some standard and some protection for the citizens that want to be able to move around and mobilize on the web without having to give up their personal freedom.
How is that going to get deployed? Do you think it's going to be driven by the government, or do you think companies are going to start getting some pushback to do better?
Nobody really knows. Obviously, we're going to have, the government wants to be more involved. The private sector wants, nothing to do, wants the government to push back even further. There's probably going to be some sort of compromise somewhere in the middle.
Do you think we want privacy? I mean, we all say we want privacy, and then we go online and we give out all of our information
Right.
all day.
I think a lot of us like to talk about it, and
Yeah.
I think some of us are a little bit concerned. But you're right. I mean, people post on Instagram that, where they are, when they were there, and why they were there 24/7. So, it's a good question, Andrew. Are we really concerned about our privacy?
What about the gatekeepers to the internet, which are private companies? They're broadband providers. How are they going to be regulated going forward? Because there's always this issue called net neutrality, which allows equal access and speeds to everywhere on the web.
I think there's going to be a lot of scrutiny there because that's where the pipe is, and I think that's where you said they're the gatekeepers. They have the filters right on the front line. So I think we're going to be seeing a lot of attention, a lot of focus on those guys.
Where will we be in another 25 years with the internet?
I don't think anybody knows, but I would say we are going to be completely immersed in technology. That we're not going to be going online. We're always going to be online.
Maybe implanted in our brains.
There's no question.
That show out there, Intelligence, right?
Exactly.
That could be happening. It's the communications revolution, maybe one of the fastest in history.
Extraordinary.
A lot faster than the Industrial Revolution. Ari Zalden, thank you so much.
Thank you, Andrew.
Taking a look at our business headlines. The latest now on the crisis in Ukraine. Interim Prime Minister Arseniy Yatsenyuk met with President Obama and Secretary of State John Kerry at the U.S. Capitol today. The two leaders discussed steps the U.S. could take to help Ukraine deal with a struggling economy and military aggression from Russia. Meantime, the EU has approved a framework for sanctions against Russia, which include asset freezes and travel restrictions. Formerly allied with the Russian Federation, the G7 has announced it will not recognize Crimea's March 16th referendum and demanded that Russia respect Ukraine's territorial integrity. President Barack Obama has directed the Labor Department to expand overtime eligibility for some salaried workers. The change will open up overtime to previously ineligible positions classified as executive or professional. Those positions you could earn as little as $455 a week in. This is the first time the level has been adjusted since 2004. The president is using his executive powers and is seen as a challenge to the Republican-controlled Congress-controlled House and is expected to be met with opposition. King Digital Entertainment, the makers of the hit mobile app Candy Crush Saga, have been valued at $7.6 billion in their initial public offering. The addicting candy-themed apps, with roughly 500 million downloads, account for 3/4 of the company's revenue. Amid strong demand for technology investments, the makers of the game are expecting a stronger showing than similar mobile app developers such as Zynga, which has lost roughly half its value since going public a little over 2 years ago. Wall Street bonuses are their third highest levels in history, just 6 years after a financial collapse and public-funded bailout. Last year's 15% increase brought the cash bonus pool to $26.7 billion. That's the highest since 2008. The growing bonus came along with Wall Street's fifth straight year of profits. The record figure does not include stock options and other types of deferred compensation, nor does it include bonuses for employees outside of New York City. Time for the Wilson Report with our global business editor, Michael Wilson, is in London. Michael, why don't you start us by catching us up to date on the European stock market?
Sure, Andrew. Thanks very much indeed. You're a bit of a wobble today, actually. Over the past few days, the markets have been relatively sanguine about what's been happening in China and also Ukraine/Russia. But they've had quite a bit of a decline. I think there is now, and I'm sure you're seeing the same kind of thing, an increasing worry, particularly about China. You saw the copper price going to a 4-year low. And I think that, people are getting slightly more worried. It isn't to say that valuations aren't fair in Europe, but it's very, very difficult when the second largest economy in the world appears to be slowing down and taking less in.
Yeah, definitely slowing to about 7.5%. In Italy, the biggest bank, huge losses. What's going on there?
Yes, indeed. Now, this is UniCredit. It's Italy's largest bank. It's a retail and institutional bank. They've taken a hit of $19 billion. What they've done, actually, is sort of to clear out and declare all the bad debts that they accrued since the beginning of the financial crisis from Eastern Europe and also from Italy. The important thing about this, Andrew, is that it's in front of the European Central Bank doing a health test of about 120 112 Eurozone banks of various sizes to make sure that if they have bad debts, that they are ring-fenced into bad banks in that kind of normal way, and the banks have sufficient capital adequacy to get over any problems that they have. It's like cleaning out what used to be cleaning out the Augean stables, if I can be classical about it. In other words, getting rid of all the rubbish and making sure that these banks are as good and as squeaky clean as possible by November this year. So it's a big process. This is UniCredit taking a hit. Within that process, there will be plenty more, no doubt.
Yeah, and somebody, of course, has to take care of the trash on the other side. George Soros having some tough comments about the European Union today, saying we have to remember the EU is not actually a country.
No, indeed so. Divided very much between creditors and debtors. And he's actually saying more, Andrew. What he's saying is that there is a big possibility of 25 years of stagnation unless, and again back to the banks, unless the banks are encouraged to lend. But he's right in the sense, I've always thought this, that it is not a country. It's a succession and a joining together, some good, some bad, of different kind of states. And he's also blaming Germany for its austerity program not contributing towards the rest. There's a real north-south divide which he's putting his finger on. People take notice of George Soros, as you know.
And Michael, just wrapping up here, we both and you have been doing a great job covering this Nigeria story and the missing oil money. There is a move by President Jonathan today.
Yes, there is. The issue is this unremitted $20 billion, and he's actually ordered a forensic audit by an outside company into what's been going on. You'll remember that he suspended the central bank governor, Lamidi Sanusi, a week or so ago. So this is a big issue in Nigeria, and I think most Nigerians will be following it with a great deal of interest, and of course they want the thing actually cleaned up.
Okay, Michael Wilson in London, thank you. Ahead, the most corrupt town in America. Coming up, you're watching Arise Exchange.
The great thing about Arise Entertainment 360 is that we cover the 360 of entertainment, food, fashion, lifestyle, culture. We're able to cover it all. And the thing I love most about the show is we're able to do a stunning combination of high and low. So we can talk about Rihanna on the red carpet, but we can also speak about high art with people like Sanford Biggers and Hank Willis. We actually spend quality time with our guests and we really get to know them. It's really intriguing because we get a 360 look at our guests.
Time for Liquid Lunch, things that make us want to drink. A Florida town has been named the most corrupt in the country and now may be wiped off the map. Hampton, Florida, population 477, is on the brink of extinction because of unprecedented corruption. First, the mayor, Barry Lane Moore, resigned Tuesday from his jail cell. He's accused of selling oxycodone. There's a good-looking fellow there. Then the entire city council resigned after accusations that the city has been running up the tab on speeding tickets and is now unable to account for the money it collected. For years, police officers ran a lucrative speed trap along Highway 301. State lawmakers, the city annexed land that did not belong to the city along the highway so it could hand out more tickets to speeders. The speed trap is only 1,200 feet long, and it lowers the speed limit from 65 to 55 in order to catch unsuspecting drivers. There's even a charge that police officers remove speed limit signs to dupe drivers. But there's more. The city collected $250,000 in 1 year from the speed limit scheme, but state auditors aren't sure where the money went. They found that $132,000 was spent at a local convenience store, $10,000 on unknown credit card charges, and $8,000 to a former city clerk, for what we don't know, whose son ran the water authority. Florida state lawmakers now give the town 30 days to explain the mess or face dissolution. Next, if you want to live large, we bring you the must-haves in luxury. You're watching Arise Exchange.
One of the great things about Arise Entertainment 360 is we have this Arise to Your Health segment, which really focuses on the holistic approach of being healthy healthy. So we do everything from working out to juicing to getting in shape by doing fun exercises like bouncing on a trampoline or wearing these bouncy boots on our feet when we're jumping all over the set. We've done karate, we've danced the weight off, we've done just about everything. And of course, I love when we eat on set, but we do it in a very healthy and clean way.
Despite luxury goods breaking into new markets, prices of upscale items in fashion, travel, and autos have increased. For example, in the past 5 years, the price of a Chanel quilted handbag has increased 70% to $4,900. Don't leave that on the subway. This explains why so many luxury shoppers now are buying these expensive items secondhand. Ken Panton, president and founder of eCityofStyle.com, joins us to talk about the latest trend in luxury spending. Ken, welcome to Arise Exchange.
Thank you for having me.
So let me ask you first, what's the concept of the website?
The website is operated by 3 different magazines. So we have eCityofStyle.com, which covers the world of luxury, style, fashion, and travel and automobiles. And then we do a deep dive with eCity of Autos, which covers the world of automobiles from Mini to Bentley. And then eCity of Travel, which covers the world of travel from the airlines that service them, from a Ritz-Carlton to a Sandals Resort all-inclusive.
Okay, and
so we keep it wrapped up.
And are the people who are going to this website, are these the 1%ers of the world or the 99% who wants to be the 1%?
I'm very happy to say it's a combination of both.
That's very good.
It took us a while to figure that out. We've been in business about 10 years. So it took us a little time to figure that out. But it's a combination of both. You are going to get the 1%er who wants to book a trip at the one and only in the Maldives. You are going to get the person who wants to take his kids away to Turks and Caicos and go to beaches for that all-inclusive. So it's actually a nice mixture of both.
In the luxury section, what kind of pops do you see? Basically, what are the big items that are moving these days?
The big items, well, for us guys, the big items is the watches.
Sure.
I mean, you want your Breitling, you want your Bentley by Breitling. I'm sure you got a nice, fashionable, fabulous watch on. But it's the watch. And for women, it's the shoes and the bags.
Why watches, by the way? Because actually, I was reading that the watch business is actually way down. So people are buying luxury because people have the time. No one's looking at a watch for time these days on their cell phones. But is watches basically a status symbol?
A watch is a status symbol. Plus, you know, with a guy, we don't have that many accessories to choose from. So we do want the watch. But a lot more people are going into the market of buying the used watch. They buy a Bentley, Breitling by Bentley, maybe 3 or 4 years old. Instead of spending $10,000, they're spending $5,000.
And there's nothing wrong with it because while watches change in fashion a little bit, plenty of people are wearing 10-year-old Rolexes.
10-year-old Rolexes, 15-year-old Rolex, 5-year-old Rolex. The Oyster Rolex looks the same as it did 6-7 years ago.
Sure.
So
let me ask you then: is there this push to buy sort of used products? And I ask this because if you see BMW making these huge ads about pre-owned, they call it pre-owned, used automobiles, and that they're just as luxurious. So are you seeing sort of that trend?
That is a trend. I mean, BMW's doing a wonderful job of marketing the whole pre-owned sector. So is Mercedes-Benz, so is Jaguar Land Rover. But that is a trend. I mean, the reality is you can buy an X5 3 years old, and it looks almost the same as a new X5 except with some cosmetic infringements. But you're saving a lot of money on that, too.
What other areas are people buying used? I mean, are they buying used pocketbooks?
Used pocketbooks? So there's something that's really great now called Rent the Runway. That you could see something on the red carpet, instead of going to Michael Kors and buying a $10,000 dress, you could rent that $10,000 dress. You go out for that night, and then you just send it back.
And you could also rent luxury homes, can't you?
Yes, you can do that.
Like celebrities rent out their luxury homes.
Yes, you can do that, and the same with jets. I mean, nobody owns their own jet. Jay-Z doesn't own his own jet. You just go to Marquis Jet or NetJets, and you can just rent anything you want.
Okay, so let's talk about cars for a moment.
Love talking about cars.
What are the luxury cars that are selling? Do they still make Bugattis?
They still make Bugattis. They're not selling as much as they like to.
Yep.
I'm sure you can get a good deal. You can't lease them, but you can get a good deal.
$2 million each.
Yeah, there's a really good one that's out right now. That's actually shown in Geneva. That's going for 1.7, which is totally sold out. But Bentley's doing a wonderful, wonderful job with the GTC Speed.
I'm seeing more Maseratis on the road.
Well, Maserati is like a rebirth of that whole brand. It's just really fascinating what Maserati is doing. I mean, it used to be such a status symbol, but now they want to focus it as an everyday driver, and that's what's going on with Maserati.
Well, I mean, they did the Super Bowl ad, so I'm wondering if these...
That was their first Super Bowl ad.
That was their first Super Bowl ad, first television ad I've ever seen.
Yes. And Jaguar did their first Super Bowl ad, too.
That's right. So I'm wondering, are the luxury makers of all these luxury goods thinking that there is actually a bigger market now, especially as maybe the economy is improving?
Well, look, let's go back to Maserati. They have a car called the Ghibli, which is a $60,000 car, new. Before that, you had to buy Quattroporte, which is going to cost you about $90,000. So they're going after a whole new market. Same with Jaguar Land Rover, being owned by Tata Motors. They're going after a different market. So they understand that you have to go to the middle market now by doing the ads. It's no longer just going to the Robb Report or talking at the country club or talking when you're sitting in the first-class lounge or talking to Little
and a lot more. We have about 20 seconds left. A lot more websites catering to
Yes,
now.
where we come into.
Right.
So, and it really helps, though. It's nice getting the word out there.
Ken Panton, president and founder of eCityofStyle.com. This was a lot of fun. I hope
Thank
you
you.
come back.
Oh, no problem. I was around.
Please come back. Thank you.
Take care.
Tomorrow, real estate mogul Don Peebles is here. Let's take a look at the markets once again. Dow Jones Industrial Average, S&P 500, and NASDAQ. A pretty mixed day as news about China sort of like dragging down the markets this week, but not a whole lot of action moving them right now. I'm Andrew Schmertz. Thanks for watching Arise Exchange. We will see you again tomorrow.